Hi students, this is a brief review regarding Quiz 2, as well as some additional information to help you to prepare for the midterm for tomorrow, Wednesday, March 6th. So I am working through grading your quizzes. It's taking a bit of a time since there were essay questions or short answer questions. Please give me some patience. I am working as hard as I can to get those completed by today, earlier than later, I hope. And at that point, you should be able to access your quiz in order to see the responses that you chose and then the correct responses. And if you have some issue with that after your quiz is graded, please send me an email, or actually better, to post in the discussion forum here on the Blackboard, and I can respond accordingly. So first of all, I'll go through the correct responses of the quiz. Explain the difference between account payable and accounts receivable. Well, most of you got this one correctly, as it reflected from the first homework. Accounts payable is a good or service that exists that's been purchased but not yet paid for. Sort of like a loan for the good. Generally, a farm supply store, they might allow you to pay your bill after 30 or to up to 90 days. Accounts payable is a current liability. It is an expense that has been charged but not paid. Whereas accounts receivable is when your business has sold goods or provided some services for which the payment has not yet been received. So this is a revenue that for a product that has been received by the customer, but they have not yet paid. Accounts receivable is a current asset. Compare the advantages and disadvantages of cash and accrual accounting. So I can tell most of you looked in the book in order to get this answer. For the most part, the answers were correct, that cash accounting is simplified. It's simply one entry. It's when cash is either coming in or going out. It's easier, takes less knowledge with regards to accounting methods. It's also an advantage for computing taxable income for income tax purposes. However, the time period of recording those transactions may not be in relationship to the production activities. Accrual accounting is more complicated because it has a double entry transaction. It's called matching. We're matching the incoming and the outgoing, and we use different transaction accounts in order to maintain the relationship between the production activities and the incoming and outgoing money. This is a disadvantage because it's more time consuming and requires more expertise or knowledge about accounting procedures. However, an advantage is that it's more accurate with regards to profit and financial measure. Explain how the 1980s debt farm crisis led to standardization of farm accounting in the FFSC. Well, in the late 70s and early 80s, the farmers, they took on too much debt in order to buy land and machinery. There were some external factors that impacted their ability to pay back debt. A strong dollar abroad, inflationary measures or monetary policy that was coming from the United States government, as well as an increase in the price of oil. Land values were decreasing at that time. The interest rates started to increase. Therefore, the farmers were compromised with the ability to pay back their debts. That's like what we saw in the video, and they were selling their farm machinery in order to pay debts and try to keep their farms. This showed that actually the lenders were not having adequate information in order to make loans. Farmers were also not able to make a decision whether they would be able to have the ability to pay back those loans. So then it was evident that standardization was necessary, which led to the task force, Farm Financial Standards Task Force, which changed their name with the Farm Financial Standards Council, or the FFSC, and then they were creating a standard practice for accounting procedures. They had lots of outreach to try to engage with academics and extension in order to implement the new standardized accounting and record-keeping procedures for farmers. Okay, explain why the balance sheet only represents one point in time. So this is pretty clear. I believe most people got this one mostly correct. However, we do want to mention what are the components of the balance sheet: assets, liabilities, and equities. So the balance sheet shows a specific point in time because it's at that moment that balanced accounting equations. Assets equals liabilities plus equities. If anything changes, something is purchased, sold, or paid off, or charged, then it will change that accounting equation. It will create a new balance sheet. However, generally we create the balance sheet at the beginning of the year and the end of the year. It just shows that snapshot, which we can compare at different points in time, but it doesn't show us the inflows and outflows of cash over time. Can a business be solvent but not liquid? A business can be solvent but not liquid. This can happen when much of the total asset value is in the assets with the least liquidity, such as land, buildings, which are difficult to get rid of and turn into cash. And most of the liabilities are current. Since farm and ranch businesses often have a large portion of their assets in non-current assets like land, buildings, then this is actually a pretty common situation. We also saw that on Friday when we looked at the balance sheet. So conceptually, a business can be liquid but not solvent. The business would have to have large current asset value relative to its current liabilities and non-current liabilities considerably greater than its non-current assets. This could happen if there was a decline in land values. Businesses that rely on unpaid labor or mostly rented land could be liquid even with a relatively high debt load. So most of you did really well on this question. Thank you so much. But really, when you are talking about these liquidity and solvency, we need to kind of mention assets and liabilities since this is interrelated. Okay, now let's take a look at the very short balance sheet. We'll come back to this question number 6. Let's do the ratios first. So the debt to asset ratio is total liabilities divided by total assets. That's 110,000 divided by 280,000, and I should get 0.39. There is a margin of error within the Blackboard exam, so if you had rounded up or down, then you should not have gotten that one wrong. However, I would appreciate it if you round to the 2 decimals. We can just simplify. Okay, equity to asset ratio. Total equity divided by total assets, 170,000 divided by 280,000 is 0.61. Number 9, debt structure. My debt structure is current liabilities divided by total liabilities, which is 60,000 divided by 110,000, which is 0.55. My current ratio, this is current assets divided by current liabilities, so 40,000 divided by 60,000, which is 0.67. And then my debt to equity is total liabilities divided by total equity, which is 110,000 divided by 170,000, which is 0.65. So now I want to calculate my working capital, which is my current assets minus current liabilities, which will be a negative number, negative 20,000. I did see some people put 20,000, but they didn't add the negative sign, but that's very crucial to understanding the working capital. So let's talk about giving this customer a loan. This was kind of a judgment call. It was basically about your rationale, how you use the ratios in order to formulate your response. So actually you can see that the customer has the weakest part of their financial condition is poor liquidity. They don't have a lot of cash because their current assets can't cover their current liabilities. If they were to liquidate their assets, they would still have debt left over. But they do have a relatively strong solvency position. They are kind of rich in non-current assets, which is pretty common for farms due to the land value and the machinery values. So you could decide if you were going to give that customer a loan. If you wanted to give them a loan, for example, $60,000, then maybe you would consider making it a long-term loan where they would have small payments over time, as opposed to having a big chunk due, because we don't want to overload their current liabilities. However, we could give them a longer term loan, which would be in the non-current liabilities, the majority of the loan section of the balance sheet. So I didn't judge your response based on if you did or didn't give them a loan. That was really your judgment. It was just about your rationale. And then here we go down to the debits and credits. So here you should have taken a look on page 46 and read the box. These true and false questions came directly from that reading, one paragraph. So debits and credits, they are not following the rules of always increasing or decreasing. It's dependent upon the account in which we are debiting or crediting. That one is not true. The second one, debits are always on the left side of the column and credits are always on the right side. This is always true, regardless of the account. A cash account is an asset account in which a debit increases the account and a credit decreases the account. This is true. A debit entry to an expense account decreases it. This is not true. And then finally, we come to the last question where you had to look at the business transactions and perform the cash and accrual accounting methods, just like we did in class 2 times. And then you need to determine which of the following sentences is incorrect. So if I develop my cash methods, well, my bill for that year is $45,000. That's a negative. I have to pay $45,000. The money that I get from selling my crop is $75,000, which makes my profit $30,000. My accrual has more transactions. I am noting the amount that I'm charging to the farm supply store. I also note that's $8,000. I note $45,000 expenditure. I count $150,000, the amount of inventory that I have, as well as the amount of product that I sold. And then I also have to handle that $7,000, which I owe, but I didn't pay until the following year. So that brings my profit, accrual profit is $90,000. And if you can see here, you should choose the sentence which is incorrect. I noticed many people chose the correct sentence. However, there is an error in the question, and there's actually 2 that are incorrect. The difference in profit from cash versus accrual method is $57,000. That's actually incorrect. It should be $60,000. And then the other one is that the accounting method shows higher expenses because we count all the expenses that have to do with that production activity, regardless of the year. So if you chose either of those, you should have gotten credit, and I am going through manually and updating that. So after a few days, if you see that you didn't get those points, but you chose either the difference in profit from cash and accrual method is $57,000, or using the cash accounting method shows higher expenses, then you should get those points. Okay, students, that's a recap of quiz number 2. That's what we wanted to do in the class yesterday with the bad weather. I'm sending you this video lecture. And just a brief statement regarding the exam tomorrow. So basically you'll have, I think, 10 questions from the reading quizzes as you've experienced before. You will have to perform a cash versus accrual comparison, similar to the one in this quiz here. You will have to perform a cost basis versus market basis balance sheet, understanding the difference in valuation of assets and demonstrating that. And then you will also do the balance sheet development and analysis, very similar to what we did on Friday or what some of you did over the weekend for homework number 2. We will revisit the writing the goals and aligning the goals with measures. And then we also will have some question about the structure of farms and ranches and the alternative strategies that we had worked on in the beginning of the semester. I believe that comes from chapter 1. So that will be the focus for the exam tomorrow, students. I hope that's helpful for you. Please do not bombard me with emails at this time. I would prefer if you could actually, I'll show you, post over here for any questions so then I don't have to repeat myself and you guys can help each other. So let's go to discussions and I go to the online learning community, and then here I can post my questions. And also you will find this video here. So good luck studying, students. Please bring your devices tomorrow, charged, ready to go. And you might need a pencil or a pen because you'll have also to do some work on the paper and then enter it into the Blackboard exam. Okay, see you tomorrow.